Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Today we didn't have change on the larger time frame as the session continued develop inside the already established weekly range. On the daily, however, we clearly see that the market is in a short-term balancing range following last week's sharp rally to the upside. Zooming into the market profile, the first thing that gets my attention is the 4 consecutive poor lows that we have in place. I've never seen something like this, and it's something that is very interesting and we need to pay attention because this suggests that the buyers buyers that have been supporting the bottom of this area, this range, are short-term money. And by the way, they are very mechanical and they are not doing a great job, I have to say, and I will get to that in a second. But yeah, it's an indication that short-term money is driving the buying activity. The reason I say they are not doing a great job is because Wednesday and Thursday sessions, which effectively didn't follow through to the downside, were particularly narrow, with evidence struggle to get to the upside. May remember, you can see in the previous briefings that there was an inability to take the overnight highs of those sessions. So therefore, they're not doing a great job. This means, the overall conclusion I get out of this is that the lower range side is vulnerable given the weak structure that we have in there. Yesterday, we talked about the aggregate V-shaped profile that opened the possibility of long liquidation after last week's rally. Now, after such an event, like when you have liquidation, the normal course should resume, and in this case, it should be upwards. Well, today we established value higher, which is relatively good, but there was a lot of hesitation. I didn't like the way the market moved higher. If you open up, immediately you try to go up and you couldn't find additional buyers to join in, and you were down, up, and there was a little bit of a liquidation rally at the end, but notice that it couldn't reach the H high and obviously not the A high. So there's a lot of hesitation to go up, and this shouldn't be the case. If the long liquidation is done, you should just move up. That means that there is no strong buying activity. With that being said, the immediate focus is on value development relative to Thursday's range, which is very narrow, relatively narrow. Acceptance below 2882.75, which is the low of the day, which by the way is poor. The nodes change and increases the odds of targeting the low of the range at 2875.25, which we know is weak. Acceptance above, on the other hand, favors the rotation towards the high of the range, with the high made on Tuesday. And remember that Tuesday session had a lot of anomalies in there, some of which have been repaired already, but we still have this area here around 2897, and then further up at 2902. As we always say, anything can happen. I'll keep an eye on the lower side of the range because if we have evidence of market weakness, there could be a sharp correction, and it's not uncommon that when you have a correction, you take all of these weak references at once. So keep an eye open, and as we always say, anything can happen because odds are just odds. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.